Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with an update as to what's happening in the Chinese economy, and specifically what's happening with the property developers. Now, if you follow the channel, I'm sure you'll be aware that the property sector in China equates to around 25% of the total economy. And in the last 10 years, that's been a bonus for China because as the property market got stronger, more and more people wanted to buy property, it became self-fulfilling. More people became employed, the property developers grew and became huge, and everything was looking rosy. However, in 2019, the Chinese authorities decided to bring in a policy called the Three Red Lines, which was designed to restrict the amount of debt the property developers could draw down and make sure that these companies were liquid and solvent. But unfortunately, from the Chinese authorities' perspective, as soon as that policy was introduced, a number of the major property developers actually breached all three of the requirements, including the most famous example, Evergrande. And since that time, the property sector has been in decline, sales have been falling, and many of the property developers themselves are now on the verge of liquidation and bankruptcy. And over the last couple of years, this has had a negative impact on the Chinese economy because it's lost that 25% boost that it was getting historically. Now, the Chinese authorities have now decided to do something about this. They've identified a gap of around $450 billion that's needed by the developers to complete the builds on apartments that they've actually pre-sold. And the Chinese authorities are now about to embark on a program of quantitative easing that's referred to as pledged supplemental lending, whereby the People's Bank of China provide low-rate loans to the other banks to distribute to all of the developers. So China is trying to fix the problem, but the big question is whether or not this is too late. Is this a situation that can be resolved? Because the Chinese consumers have lost confidence in the property market, not surprisingly, because a lot of them have handed over deposits of up to 100%, because that's the requirement in certain regions in China in order to buy apartments that have never been built. So they've given over their life savings and also taken on mortgages and debt for property that doesn't even exist. So this is quite an unusual situation. So in today's video, we'll have a look at the three red lines and what the impact of that has been on the sales by property developers. We'll have a look at what's going on with regards to bad debts for the Chinese banks and their interest margins. And I can tell you that bad debts are up and interest margins are down. We'll have a look at what's going on with new home prices and investment into the property sector, what's been happening in terms of where the property developers have actually been able to get some finance from. We'll have a look at the new quantitative easing program that the Chinese authorities are introducing. And then finally today, I'll wrap up with my summary. So what I think is likely to happen in the Chinese property sector over the course of the next 3 to 6 months, and what the implications of this will be for the Chinese economy. But before we get started on all of that, I'd like to say once again, thank you so much to everybody that's supported the channel. If you're a Patreon or a YouTube member, or you've bought me a coffee or sent me a YouTube super thanks, thank you so much. I really appreciate it. The three red lines are a financial regulatory guideline that the Chinese authorities introduced in August 2020 to curb the debt exposure of Chinese property developers. The rules themselves relate to liabilities, net debt and cash reserves, and state that liabilities should not exceed 70% of assets and have to exclude advanced proceeds from projects sold on contract. Net debt should not be greater than 100% of the company's equity, and money reserves must be at least 100% of short-term debt. And this chart shows the percentage of property developers in China that have breached all three of these red lines. The scale on the right-hand side of this chart is percentages going from 0 at the bottom to 40 at the top. The first bar here shows the full results for 2020, although the policy was only actually brought in August. And it shows that 16% of all developers at that time had breached all three red lines. Now, interestingly, in the first half of 2021, it was reported that that percentage had actually dropped to 5%. And the reason that the percentage fell so sharply was that a lot of the developers did as much as they could to gather in as much cash to try to satisfy the cash reserve to short-term debt ratio. However, as you can see from the rest of this chart, that position was not sustainable, and there's been a progressive increase in the number of developers breaching all three red lines. At the end of 2021, 13% of all the developers were in breach. The percentage rose to 23% in the first half of 2022, rose further to 34% by the end of 2022, and in the first half of 2023, 35% of all property developers in China have breached all 3 red lines. And this obviously shows how serious the situation is, because this policy has been in place for 3 years. So developers have had plenty of time to try to address the issues on their balance sheets. However, the 2 main problems that developers are facing are, firstly, the property market is on its knees, and so they're struggling to be able to make sales. And secondly, they don't have the available debt or cash to be able to complete a lot of the projects that they've started. This chart shows the year-on-year percentage change in monthly sales by the top 100 property developers in China. The scale on the right-hand side of this chart goes from minus 60% at the bottom to plus 40% at the top, with 0 being the line across the middle of the chart. And across the bottom, we've got the monthly data going from February 2022 to October 2023. And before we dive into the detail, you can see that the vast majority of these figures over the last 20 months are in negative territory. The situation at the start of 2022 was dire for Chinese property developers, with year-on-year sales falling by 47% in February, 53% in March, 58% in April, and in May 2022 hit a year-on-year low point of a fall of 59%. Now, from that point forward, it looks like the trend started to improve. However, these figures remain dire. And the one thing that you need to take into account is that this is a year-on-year comparison. And 2021 was not a good year either. So what we're talking about here is a year-on-year fall against 2021. But if 2021 also showed a year-on-year fall against 2020, we are talking negative upon negative. The drop in sales in June was 43%, 40% in July, 33% in August, 25% in September, 28% in October, 26% in November, 31% in December. And in January 2023, the year-on-year fall in sales was 33%. And if you put this into the context of any business, it's going to be a problem. If you've got 30 or 40 or 50 or 60% falling sales year on year, your business is absolutely imploding. It would be very difficult for any company in the world to be able to cope with this. But the situation is actually worse for Chinese property developers because they have such high fixed costs, because they're having to buy the land, they're then having to invest in all the people and the materials and the build costs before they make any profit, before they can actually sell these things. So when you've got year-on-year falling sales, it's an absolute disaster. Now, interestingly, the year-on-year sales in February, March, April and May actually moved into positive territory. There was a year-on-year improvement. And this period corresponded with the uptick in the Chinese economy after the COVID-19 restrictions were released at the end of December 2022. There was a lot of confidence that the Chinese economy could bounce back strongly and have a good performance in 2023. However, if you've been following the channel, you'll know that that confidence was short-lived, as shown by the movement of this chart. But the other thing that's important to take into account is the point that we mentioned earlier about the year-on-year comparison. In February 2023, the year-on-year performance for property developers was an increase of 15%, which at face value sounds like a good outcome. However, when you take into account that the performance in February 2022 was a 47% fall year-on-year, we are comparing the February 23 figures with those disastrous figures from 2022. So a 15% increase against those disastrous results might not actually represent a good outcome overall. This could represent a continued fall against where the company was in 2021 and 2020. And the increase of 29% in March 23 and 32% in April compares to falls of 53% and 58% in March and April 2022. If we now look at what's been happening over the last 5 months, sales were down 28% in June, 33% in July, 34% in August, 29% in September, and 28% in October. And when you look at the corresponding sales figures for those 5 months for 2022, which were also down around 30% year on year, it really brings home how disastrous these results are. Because year on year, the company is experiencing falling sales, and the benchmark year from 2022 also had a disastrous fall in sales. And the reason that I want to go through this chart in such detail is that it shows how difficult it is for these Chinese property developers to be able to turn things around. Because if they're not making sales, then they're not generating cash, and therefore there is a high chance that they won't be able to service their debt and that these loans could go bad. This chart shows the loans on Chinese banks' books that are officially recorded as bad debts. So basically where the bank is not going to recover its money, where it's lent to a company that's either gone bust or is on the point of becoming insolvent and therefore won't be able to pay back its debts. And as you can see, we've got two different types of graph on this chart and two different scales. The bar charts record the amount of bad debts in that particular year. The scale on the right hand side is measured in billions of yuan and goes from 0 at the bottom to 3,500 billion at the top, so basically 3.5 trillion yuan. And just as a comparison, $1 is trading roughly for around 7 Chinese yuan at the moment, so 3 trillion Chinese yuan equates to around $430 billion. The line graph on this chart records the bank's net margin, so basically what profit they're making on their loans, and relates to the scale on the left-hand side, which goes from 1.7% at the bottom to 2.8% at the top. And the scale across the bottom are the dates going from the start of 2013 to the third quarter of 2023. So we start off by looking at the bar chart, which shows us the level of bad debts that the banks are incurring. You can see that over the last 10 years, there has been a consistent and sharp rise in the level of bad debts that Chinese banks have been recording. At the start of 2013, the total level of non-performing loans was 500 billion yuan, which is around $70 billion. However, the most recent figures for September 23 show that that level has increased to 3.25 trillion yuan, which equates to around $465 billion. And that represents an increase of around 6.5 times over the last 10 years. And this graph really is quite remarkable, because if you were to look at similar graphs for banks from the West, we would have an increase in non-performing loans and bad debts at times when there was a downturn in the economy. And then as things improved, we would see the situation getting better and the level of bad debts falling. However, in China, you can see that there's been a constant increase in bad debts. And this really relates to the fact that the Chinese banking market is very different to the banking market in the West. Unlike most Western banks, Chinese state-run banks are subject to government directions on how much they lend and to what sectors, especially during economic downturns. Bank executives are often summoned to the government for impromptu meetings to give verbal instructions known as window guidance to nudge lending towards desired areas or restrict certain businesses. And really what this chart is showing us is that the huge amount of lending that was provided to the property developers as part of the push by the Chinese authorities to rapidly accelerate the level of development all across China has now resulted in a very high percentage of bad debts because the developers have become over-leveraged, and as we saw from the data earlier in the video, sales have collapsed. If we now have a look at the line chart on this graph, which shows the bank's net interest margin, so basically the profit that the banks are making, back in 2013, that profit level was sitting somewhere around 2.6 to 2.7%, which is a very healthy margin. However, over the last 9 years, there has been a significant fall in the bank's net margin, and the most recently recorded margins are down to 1.7%. So that represents a fall of around 100 basis points, and clearly the banks in China today are making significantly less profit than they were 10 years ago, at a time when their level of bad debts is increasing significantly. So profits are being squeezed and losses are going up, and all of this represents seriously bad news for the banks. This chart plots the movement in new home prices and property investment in China, dating back to the start of 2013. The scale on the right-hand side of this chart is the percentage year-on-year movement and goes from minus 20% at the bottom to plus 40% at the top, with the zero line being about 2/3 of the way down. The black line shows the movement in new home prices, and the yellow bar chart show the level of property investment. So if we start off by looking at what's been happening with new home prices, in 2013, new home prices were rising year on year and hit a peak increase at the end of that year of 9.7%. Now, the growth in prices started to fall in 2014 as part of the global slowdown that was seen in that year, and actually moved into negative territory in September. And by April 2015, house prices were down by 6.6%. However, from the middle of 2015 to the middle of 2019, there was a recovery and prices started to increase again. From the middle of 2019 onwards, the market started to slow down, and in April 2022, new home prices actually started to fall. And in every one of the last 19 months, there has been a fall in new home prices. And the shape of this new home price chart really reflects the change in confidence of Chinese consumers. Up until the middle of 2019, property was seen as the holy grail. Everybody wanted to invest in property in China. However, that situation has changed over the last 4 years. There is now a complete loss of confidence in the market from Chinese consumers. And that's why year on year, house prices have been falling, because the developers need to bring prices down to encourage people back into the market. And if we have a look at what's been happening with property investment, you can see that back in 2013 and 2014, there was a huge amount of money being invested into the sector. That investment continued in 2016, 17, 18 and 19 up until the COVID pandemic. There was then a reduction as a result of the pandemic, a bounce back in 2021. However, over the last 2 years, investment in the Chinese property sector has moved into negative territory. So what we're seeing from this data is a complete reversal of the market. Previously, everybody wanted to invest in property. Now, nobody wants to invest in property. This chart shows the level of new property lending in China from 2013 to the end of the third quarter 2023. The black bars on this chart show individual mortgages for property. The pink bars show other property-related loans, so if people are taking out loans for furnishing or other things relating to their property, and the orange line at the top is the combination of the two. And the scale on the right-hand side of this chart is shown in trillions of Chinese yuan, going from -2 at the bottom to +6 at the top. And what this chart shows is that from the start of 2013 through to the end of 2018, there was an astronomical increase in the amount of lending that was taken on by Chinese consumers to purchase property. In the first quarter of 2013, there was a total of 2.2 trillion yuan of debt taken on. However, by the end of 2018, the amount of new lending had increased to 6.5 trillion yuan, which represents an increase of almost 3 times in 5 years. If we now look at the right-hand side of this chart, you can see that there's been a serious reversal of the situation over the last 5 years. And actually, between the middle of 2021 and the middle of 2022, there was a net repayment of related property loans, so the pink sections on the bar chart, as people wanted to pay down debt and reduce their exposure to the property market. And if you look at the situation for the third quarter of 2023, things have now moved into negative territory, which means that there is no new net lending from the bank's point of view. So they're stuck with all of their old debt without bringing on any new debt, and that increases the potential risk of further losses. This chart shows the sources of funding for Chinese property developers dating back to the end of 2016, so basically for the last 7 years. And we've got 3 different coloured lines on this chart. The black line shows the year-on-year movement in domestic loans from Chinese banks. The pink line shows funding from corporate bonds and equity raises made by the companies. And the yellow line shows cash that's received from pre-sales, so basically customers paying in advance for apartments that haven't yet been built. And the scale on the right-hand side of this chart shows the year-on-year percentage movement, and the movements in these 3 lines are really interesting. But let's focus in on domestic loans and bonds and equities first, so the black line and the pink line, because these 2 are moving in tandem. In 2017, the developers were struggling to raise money from the equity and bond markets, and so there was an increase in the amount of domestic loans being provided by Chinese banks. That situation reversed in 2018 when the bond and equity markets opened up again. So the property developers tapped those markets rather than taking money from Chinese banks. In 2019, they took money from both Chinese banks and the bond and equity markets. In the first half of 2020, the COVID-19 pandemic hit globally, so nothing was available. However, in the second half of the year and in 2021, the developers raised money from the bond and equity markets firstly, and also from the Chinese banks. However, since the end of 2021, you can see that both the pink and the black lines have moved into negative territory. However, in the last couple of quarters, you can see that the pink and black lines have crossed over as the Chinese banks are instructed to release some money. However, both lines are still in negative territory. If we now look at the yellow line, this tells us why some of the developers are now having major problems. Because in the vast majority of the period between the end of 2016 and the start of the COVID pandemic, the biggest source of funding for Chinese property developers was advanced payments from customers. You can see that the yellow line is at the top of this chart. So basically, the developers were taking money in advance of building these apartments and using that money to fund their business. And as we've talked about before on the channel, the problem for them came when the Chinese authorities introduced the 3 red lines and cut off all future debt, because it meant that they were unable to finish those apartments, so they couldn't actually give the product to people that they'd paid for in advance. And if you now look at the movement in that source of funding between the end of 2020 and the end of 2021, you can see that there was a huge spike in the level of funding being taken by the developers from customers as they pre-sold all of these apartments, took in a huge amount of cash, and then unfortunately a lot of those buyers never saw their properties. Now, as you would expect, from the end of 2021 through to the second quarter of 2023, the level of funding from pre-sales fell dramatically and actually became the lowest source of funding for all of these developers. However, it did briefly pop back up into positive territory in the second quarter of 2023, as the outlook for the Chinese economy briefly started to look positive and everybody became a little bit more confident. However, that situation quickly reversed, and you can see that pre-sales have now also fallen back into negative territory. The Chinese authorities have identified a $446 billion gap in the funding for Chinese property developers, which they are now aiming to fill by instructing the Chinese banks to increase their lending to these developers to get them back on track. Chinese leaders are making their most forceful push yet to end the nation's property crisis, ramping up pressure on banks to plug the estimated $446 billion shortfall in funding needed to stabilise the industry and deliver millions of unfinished apartments. Policymakers are drafting a list of 50 developers who are eligible for financial support, which include Country Garden Holdings, indicating a pivot by Beijing to help some of the most distressed builders. The Chinese authorities are deploying a form of quantitative easing, referred to as pledged supplemental lending, which are loans to policy banks to help fund development projects. And this chart shows the amount of loans that the People's Bank of China have provided dating back to 2015. And the scale on the right-hand side of this chart is shown in trillions of Chinese yuan, going from 0 at the bottom to 4 trillion at the top. Between 2015 and the end of 2019, the People's Bank of China's support for pledged supplemental lending increased from 0.5 trillion yuan to 3.6 trillion. However, after the 3 red lines policy was introduced, there was a reduction in this form of lending, and it hit a low point of 2.5 trillion yuan towards the end of 2022. Now, as a result of the severe problems that have been experienced in the sector over the last year or so, the People's Bank of China has increased its lending back up to 3 trillion yuan, and it's now been announced that a further 1 trillion yuan will be provided to bail out these property developers. So what's the summary and conclusion today? Well, I wanted to post this video really to give you an update as to what's happening in the property sector in China, because it's absolutely critical to the success of the Chinese economy. When you've got a sector that contributes 25% of your total GDP, you need to look after it. And as we saw from the data in today's video, between 2013 and 2019, things were going really well. The Chinese authorities were supporting the sector, there was lots of debt easily available for all of these developers, and everybody in China was excited about property. People were sleeping out on the streets, literally, to get their hands on new releases of these apartments. But of course, they weren't actually buying the apartment, they were just buying the right to take ownership once it was built. And in many situations, people were handing over 100% of the purchase price up front to these developers so that they could get that property. And as we saw from the chart earlier, the developers used that as one of their main sources of funding. They were taking in cash from customers and using that to fund other developments. And of course, that works fine as long as you can continue drawing down huge amounts of debt, because you don't have to worry about where the cash is, whether you've spent that person's deposit on something else, because you can just draw more and more money from the banks. But unfortunately, in 2019, the Chinese authorities decided that they wanted to tidy up the market. They wanted to shake out all of the developers had been doing things wrong. And unfortunately for Chinese authorities, that turned out to be most of the market. So as soon as the three red lines were introduced, around 15% of all of the developers tripped all three of them, so they failed all three of the tests. And that percentage is now up to 35%. So 1 in 3 property developers in China are currently not compliant with those regulations. And those companies are now at risk of going bankrupt. Because they've tripped all three red lines, they're no longer eligible to draw down new money. And that means that they're in a world of pain because they've got all of these customers that they've taken the money from, that they owe apartments to. But until they get some cash, they can't do anything. And the Chinese authorities have woken up to this fact, predominantly because some of the biggest developers that they've got, including Evergrande and Country Garden, are in this state of limbo where they can't get any money. And until they do, this situation could get worse and worse. So the Chinese authorities have now set aside 1 trillion Chinese yuan to try to solve this problem. And that sounds like a lot of money, and it is, but it equates to around $140 billion. But it's been identified that the gap in the market is around 450 billion US dollars. So there's a shortfall here of around 300 billion. And unless the Chinese authorities increase the amount of funding that they're putting out to the banks to give to all of the developers, we are definitely going to see some of these developers going bankrupt. And as we saw from the data in today's video, sales in China are down, new home prices are down, and year on year, the Chinese developers are selling a lot less property than they once were. And until that turns itself around, these businesses will not become viable. It's all very well giving companies debt and letting them have some cash to continue building, but if those builds are only to satisfy projects that they've already been paid for, they're not going to make any profit because they've already spent that cash. So these developers need to start building new developments for new sales, for new profit and new cash. And until they get to that situation, they won't be solvent. And that looks a million miles away from where these companies are sitting right now. And as we saw from the bad debt analysis in today's video, bad debts are increasing month on month in China. They are getting higher as bank margins get lower. So what that means is that the banking sector in China, firstly, is making less profit because its margins have gone down. And secondly, is now running the risk of incurring massive bad debts. And of course, if the bad debts for a bank become too large, the bank itself can become insolvent, which would mean that it needs to be bailed out by the Chinese authorities. So we've got a very, very circular connection here. The authorities are telling the banks what to do. They're telling them to go out and give more money to the Chinese property developers. The developers are using that money to build all these apartments that they owe to people, but they're not going to turn it into serious profit or cash. So those companies are not actually improving their trading position. They're not improving their credit risk. And so the likelihood is that the bad debts will increase further, which is going to put more pressure on the banks at the same time as the authorities are telling them to lend more money to the property developers. So we've got a very circular situation, which could quickly become a vicious circle and could cause major problems, not just for the developers and the banks, but for the Chinese economy. Because if this sector does go down, it's going to take the Chinese economy with it because it represents 25% of GDP. So the overall summary of today's video is that things are still extremely bad in the Chinese property sector. The Chinese authorities have now come up with a plan to try to fix it, but they haven't come up with a big enough number to fill the gap that's needed. And by giving these companies more debt, it's only going to increase the burden in terms of the interest and repayments that they're going to have to make. And the real problem here is the property sector itself, because Chinese consumers have lost confidence in property. They don't want to buy it unless it's an absolute bargain. And until the Chinese authorities sort out that problem, they won't be able to fix the sector, and therefore they won't be able to fix their economy. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. Here's something to put a smile on your face.